Gold is the most traded instrument in retail forex after the major currency pairs. And it's the one beginners get wrong most often. People treat it like forex, blow up on the leverage, and blame the broker. The truth, gold has its own personality. And once you understand it, the strategy is actually simpler than trading USD. In this video, the simple gold setup I'd give any beginner, the mistakes that cost people money, and which brokers give you the best conditions for trading XAUUSD in 2026. Before any strategy, you need the why. Gold moves on three things. 1. The US dollar. Gold is priced in dollars, so when the dollar weakens, gold tends to rise. 2. Real interest rates. When inflation-adjusted yields fall, gold becomes more attractive because it pays no interest itself. 3. Fear, economic uncertainty, and geopolitical tension push money into gold as a safe haven. Notice what's not on that list: the news headline of the day or your gut feeling. Strategy 1. Only trade gold when at least one of these three drivers is trending. Here's the simple strategy that works for most beginners. First, identify the trend on the daily chart. Higher highs and higher lows means up. Second, wait for a pullback to a key level, a previous high, a round number like 2,000 or 2,600, or a moving average you use consistently, the 50 or 200. Third, enter with the trend when price respects that level, set a stop below it, and take profit at the next level. That's it. No indicator stacking, no scalp and pray. 3 steps: discipline, repeat. The edge isn't the strategy. It's that you follow it on every trade, including the losers. 3 mistakes kill gold traders. Mistake 1. Over-leveraging. Gold is volatile. A 1% move is a normal day. With 1 to 500 leverage, that's a 500% move on your margin. Mistake 2. Trading gold like a stock, holding through news events without a stop. Mistake 3. Revenge trading after a loss, doubling size to get it back. If you take one thing from this video, let it be this: gold trading is a game of survival first, profit second. Now, where to trade it? Our gold trading broker ranking for 2026. At the top, XNES, a $10 minimum deposit, extended swap-free options for gold, and the deepest gold liquidity among the brokers we tested. Second, IC Markets, a $200 minimum, raw spreads from 0.0 pips on gold, and the fastest execution for metals. It's the scalper's choice. Third, XM, a $5 minimum deposit and swap-free gold accounts, making it the low-budget entry. Fourth, Tickmill, a $100 minimum, ultra-competitive gold spreads, and an 8 out of 10 rating from our traders. And fifth, HFM, zero minimum deposit and flexible gold account options. All 5 offer swap-free gold for eligible regions. Check availability in yours. Let me show you the math, because this is where it becomes real. Say you have a $1,000 account and you're trading gold with a $10 stop. A standard lot of gold moves roughly $10 per point. With a $10 stop, one standard lot risks $100. 10% of your account on a single trade? Too much. Instead, risk 1%, $10, which means a 0.1 lot position. If your strategy is right 55% of the time, you survive the losses and compound the wins. If you're risking 10% per trade, one bad week ends you. Same strategy, different sizing, completely different results. Gold trading doesn't have to be complicated. Trade with the trend, wait for the pullback, respect your stop, and never risk more than 1% per trade. Choose a broker with tight gold spreads and fast execution. Full reviews and live spread comparisons are linked below. And if you want to test the strategy without risking a cent, the site's trading calculators and demo account guides have you covered. Links below.